Hello, and thanks for joining us today. I'm super excited you could be here. Look, today I'm bringing you a very special guest because there's really two different avenues, two different angles that they can actually use to help you. First of all, if you're looking for business funding, this is a phenomenal solution that offers some really cool products to be able to help you easily get money when banks make the process like so difficult. But the other angle is that if you're actually going to be in the business or already in the business of helping somebody get funding, then I'm bringing you a very special guest that can help you in that right too, where you can actually make money by helping them actually get funding for their business, or maybe you're already doing that. And this is a great source to actually place loans with us. So with us today is Natasha Dillon. Now, Natasha is actually the co-founder and chief financial officer of FundFi Merchant Funding, a leading alternative financing company that helps small and medium-sized businesses across the United States and Canada access fast, flexible working capital solutions. So with a finance career spanning nearly 2 decades, Natasha oversees underwriting, accounting, compliance, and financial operations while helping business owners secure the funding they need to grow and thrive. Now, known for her expertise in alternative lending and merchant funding, Natasha has actually played a key role in scaling FundFi into a trusted funding partner for entrepreneurs who may not qualify for traditional bank financing. And under her leadership, FundFi has developed a reputation for providing customized finance solutions, very fast approval, and a streamlined funding process designed around the real world needs of business owners. Natasha, what's up? Thanks for joining me today.
Thank you.
I love what you're doing over there because you deal with some really cool funding programs that I think make it easy for business owners to get versus traditional financing. But you serve such a need as well in the ISO market of helping ISOs have a good place and an easy way to be able to get their loans done. So let me ask you this. If we look at the beginning, like what made you go down the road of originally starting FundFi?
Yeah, so actually, funny enough, I was a consultant many, many years ago, feels like many, many years ago now. And a lot of my customers, a lot of my clients were coming to me originally for management consulting, but it always sort of turned into a finance cash crunch sort of situation. So I found myself looking for different financial solutions for them and came across revenue-based financing, and then got connected with some folks that were already in the industry, and then eventually joined myself. It was sort of just a perfect fit for me, and how I also had previously worked. I used to work at a bank and things like that. So this was a perfect fit for me. But really, it was about initially helping those clients that were my consulting clients. And then I eventually got into underwriting, had my own book, worked on a different platform where there were several different funding options, and then met my partner who was in the sales department of our last company. And we decided to break out on our own and start FundFi about 6 years ago, actually.
That's cool. Well, congratulations. You've done a lot in 6 years' time.
Yeah, it's been a fun, fast, and a lot of growing experience. Yeah.
Yeah, it's cool. And I know there's some things I want to talk about because I know you're launching a whole new back end for your clients. You have a whole new side. I mean, so many things are happening so fast in your world. So you talked about revenue-based financing. Is revenue-based financing the main product that you're offering at FundFi?
Yeah, so that's where we've started. That's what I've been doing for the last 12, 13 years is revenue-based financing. So what that means is that we take a look at the bank statements. We're not relying on a tax return. We're not relying on other sources of calculating revenue for the client. It's really about cash flow. It's about the cash in, about the cash out, what kind of debts they're currently paying, what kind of revenue, and we all project that for their future. So it's all future receivables that we're projecting, because that's what we're essentially purchasing from them. We're purchasing their future receivables and giving them an advance at current time based off of that. So that's been our product, our bread and butter and still our main product. We have recently launched other products, more of like a loan product as well. And we're in that sense of making things more comprehensive and easy to understand. We've sort of broken out those different businesses into different structures. So we have now under FundFi, we now have FundFi Merchant Funding, which is that revenue-based financing. We have FundFi Financial Solutions, which is more that loan product option for folks. And then we also have FundFi Canada, which is obviously our funding in Canada.
Yeah, and that's interesting too, because I that's a unique approach. I don't know of anybody else that I know of that's venturing in the United States and into the Canadian market. What made you make the decision to venture in the Canadian market, out of curiosity?
Yeah, I mean, Canada is so closely related to the US as far as how finance operates. Canada also has a large gap in their financing options for clients because they only have five banks, where, in the US you have major banks, you have regional banks, you have local banks. There's so many options for banking in the US. In Canada, there's a very limited amount of those options. And therefore, there's not a lot of options in general for financing for small, mid-sized businesses in Canada. But then in addition to that, there's just a smaller amount of alternative finance options for them as well. So whether or not they don't want to go the bank route, there's just a limited amount of options. Canada is a great country there, and it's smaller, obviously, than the US, but still there's a lot of opportunity and a lot of businesses and a lot of growth happening there.
Yeah, it's really interesting because we're the biggest in the business credit building space, and I can tell you that we've been doing this for decades. I without a doubt, one of the top 5 questions I'm asked is, "Can you help in Canada?" And I'm glad you just said that, because I never understood, like, so many people need help up there, and a lot of the U.S. based lenders and credit solutions just don't work up there. So kudos to you for helping solve problems, because it's definitely needed.
Yeah. Look, there's lots of opportunity in the US. There's lots of businesses in the US that need financing. So probably, if folks are sole focused on that, that makes sense a lot of times. But we just had an opportunity to expand there, and we took it, and it's been a great. We've been actually there now for 2 years.
Wow. So congrats. So revenue financing, to what you're saying, is we're not looking at a lot of the paths that we take with traditional loans. It's not credit based. It's not based on tax returns and P&Ls and a lot of that, which sometimes maybe you need, maybe you don't. But we're really looking primarily at bank statements. So what's a minimal amount of revenue that you'll actually consider for an applicant coming in?
Yeah, so our focus is not on a startup. It's not on a business that's looking for that seed capital. So we're really looking for established businesses that have a proven model, so that we know that they're going to, in those, we can truly project those future receivables. So our minimum is time in business is a year in business, and our minimum revenue is going to be anywhere north of 20,000 a month is really where we're looking to start. And from there, we determine, again, we can then project what their future receivables are.
Perfect. So your time in business, 20K a month in revenue. And then from there, what kind of loan amount? What's your loan amount range?
Yeah, we do anything from 20,000 to 250,000. That's sort of our sweet spot. We certainly go north of that, but that's where we start with our clients.
Sure. So, and oftentimes I know that a lot of your business comes from ISOs, or what, for those that don't know what that means, is they're brokers. So, FundFi is very, very well known in the world of loan brokers, where loan brokers are sometimes what people refer to that aren't in the industry, and ISOs can actually send the business to you. And I know you directly help business owners come in as well. So I'm curious, are you really good at then helping those people get more and more funding as they grow from the time that you lend them the money the first time?
Yeah. So once we have a established relationship, we're really, obviously then communicating with that client and working with them. Typically, what that happens, it comes to be, is maybe a payment. Maybe they didn't receive a payment from one of their customers, so they call in to say, "Hey, letting you know what's going on. We need to either reduce that payment or postpone that payment," and we work alongside with the clients throughout that process. And as we establish that payment history with them and they establish it with us, we have the ability to start getting flexible with our renewals. So just like on the beginning side, where we are the alternative financing option, meaning that we're an option that is available when banks aren't available, it becomes the same when it comes to the renewals or the refinancing. So we really communicate, find out what the story is, and that's really where we can make certain decisions of how we can work alongside them. So when they are really in a need, or in a place where they need something quicker than usual, having that established relationship with us is really beneficial for them, because they're able to then have some flexibility with how they borrow.
Yeah, I love that. And then able to come back and get more funding as they grow. So, what do you think, from your opinion, like what is FundFi? What separates you from maybe some others in the space that might offer some kind of product in the revenue and lending side?
Yeah, I mean, certainly I would say customer service is a big part of what we do. We also are competitive in certain like nuances with the deals. There are a lot of alternative lending options in the space in the US particularly. So there's a lot where we match up and it kind of all kind of shake out to the same underwriting. It's really a matter of what that client qualifies for. It's really not so much an art when it comes to those sorts of numbers. But where we sort of separate is we know industries a little bit more intimately, so we might be able to go a little bit deeper into a certain industry. We might be able to offer a little bit more financing if we truly feel that there's more. We ask for a story, basically some documentation that sort of allows us to see, okay, we see there's really a projected growth here, so we feel comfortable going a little bit more. But that, and again, that sort of return customer is really where we can get a little bit more competitive alongside with keeping those clients with us and having that retention, because we know their business, we know their story, we know what they're capable of, and we also know what they're not capable of. So we know where we can't really push them a little bit further.
Yeah, and I really appreciate what they're trying to do in their story and how that ties in to how you're making underwriting decisions. So when it comes to term, what kind of terms do you offer, like from 3 months on, or like how long is your typical loan term or your advantage
Yeah.
term?
Yeah, so it's all under 1 year. So it's sort of in that longer than, definitely longer than 3 months. We're looking, past 6 months sort of term, and in six to 11 months, I would say. But what's great about that also is it allows them, because also repayments are on a weekly basis. So it allows them to pay down their current balance so that they can refinance. And that really is necessary a lot for these small, mid-sized businesses. Like we're definitely seeing clients that maybe they say, okay, this is great, I have a 2-year term, but when they're in need of cash again in 4 or 5, 6 months, that option is not available to them for those different sources. So then what happens is they end up taking multiple positions, and they're actually just increasing their debt because they're desperate for the cash at that very moment. And then they really run into a lot of trouble, where we feel that we know what their payment ability is, and we can have them pay that back in time and continue to pay down their balance so that they can keep getting those cash injections at times that are really necessary for them.
Oh, I love that. And I love the weekly payback as well, because a lot of the solutions let's say the MCA type space are daily, and a lot of business owners don't like that. So that weekly seems to give them a lot more flexibility.
Yeah, yeah. I mean, there's certain businesses that work well with a daily. Like I'm thinking a restaurant, where you're getting batches every single day. Sure, they can handle that, but you're right. Most businesses, and we really see, so many different industries. There's so many different types of businesses out there. People are really working hard and being entrepreneurs in so many different facets and solving so many problems that a daily payment just doesn't. They don't get cash daily, so it doesn't make sense to make payments daily.
You mentioned industry a couple times. Are there industries that you really gravitate to that you're better suited for than others?
Yeah, so I mean, look, we're trying to help every business out there, but we certainly know, economics play a part in a lot of different aspects of what we can do, and we want to stay in business as well, and we want to be paid back as well. So there are certain industries that we pull back in certain times, that we feel that maybe there'll be a little bit more hardships, or we don't foresee a future receivable that we're talking about. And then there are industries that we feel are strong in every different type of economy. A lot of specialty trades are big for us. So I'm talking plumbers, HVAC, electricians, roofing, things that we feel will never go away. That's a big industry for us. Different types of companies in the medical space are always there, always available, no matter what the economy brings us. So those types of industries, are stronger for us. But then, when we're talking gas prices going up and things of that nature, we pull back on industries like trucking or other sorts of petroleum-based companies. So there's certain things that we choose. We can pull a lever each way for that.
Yeah, I love that. And you're also big on the technology side. I think we're talked about a new backend that you're building for your clients. And it also seems like you have the ability to, on the technical side, to help them track applications, to be able to upload documents, even kind of look back at history. So can you talk about the technical, advantages that you provide clients as well?
Yeah, so on the front end, we are working on making that process a lot easier for clients as well. So where we were not really forward interfacing at all with clients, which we really, we don't do on the front end, we don't market and things of that nature. We were just focused on building those broker relationships. But now we have a source where they can come to a website, fundfi.com, and they can see what our different products are and sort of make decisions about what makes sense for them, even if they're coming through with a broker and then the broker sends them our contract, and they can then have the option to go and see kind of who we are and feel that they know us better and our products better. And then once they become a client of ours, we will very soon have an option for them to have a login, and they can log in, they can see their payments, they can see their balance, they can request those sorts of refinancing options like we were talking about. Like you mentioned, upload statements, link their bank account if that's a preferred option for them. So just making the friction less for them when it comes to continuing the relationship.
Yeah, I love that. I mean, technology, it's great to be able to help them make it easier process for the client. As you said, remove the friction. Now, when revenue financing is set aside, you would tell me a little bit more about your loan product.
Yeah, so our loan product it's a similar product. It's obvious, and it's similar to a lot of loan products in the sense that it's a little bit more of a challenge to qualify. With the revenue-based financing, not that we overlook, but we have a lot more flexibility with any sort of past blemishes that a client might have, any issues they might have had in the past. It's a little bit more of an option for them, again, because we're basing it off of their current revenue and their current status. Where a loan product is going to be more aligned with that sort of process. So you need to have a much cleaner background, better credit, and just have the availability to get those products a little bit differently. We also offer it in certain states and not in every state. So there are certain regulations and rules that we have to abide by as well when it comes to those products.
So when it comes to the loan, what kind of terms do you offer on the loan?
Yeah, so that's more of like a 2-year term, something like that, where they're able to, again, it's not a business that's in need of a cash injection on a 6-month kind of process. So we're watching that. We're making those determinations. It's definitely not our main product, like I was mentioning before, still revenue-based financing, but it's an option for clients, and particularly, again, when it comes to their refinancing options with us. So if they've been with us for a long time, we might say this might be a better product for you to move into if they qualify.
Wow, I love that. So you can help somebody with revenue lending get started and help them kind of grow the business, and then move them into an even better loan product then as they continue to kind of prove themselves and also show that they're using the money to be able to grow the business.
Yeah, I mean, I think the perception is that it is a better product, but it also depends on the company. It depends
Sure.
on what their needs are. So it might be a better product. It might not be a better product for what they're looking for. But if it is the right product for them, we have that option for them.
Yeah, I love that. And it's good to have options. So they're able to get, on the loan side up to, 2 years. Now, it's not as easy as revenue lending, because your revenue lending program is fairly easy. If you have revenue consistent, you show that, you're managing revenue responsibly. You show the business is stable. It looks like revenue projected out is going to be the same or increase. Then it's pretty easy to be able to get them approved. But with the loan product, are you looking at revenue, obviously, but are you looking at tax returns too, and P&Ls and balance sheets? Are you looking at consumer credit? Like what's that look like from an underwriting perspective?
Yeah, all of that comes into play at that moment. So, there are different options that folks choose to take when they create their tax return. So that has to come into play too. And if the revenue isn't showing there, it's not something that we can work with. Now, if they're an ongoing customer of ours and we're very familiar with them, I mean, we have some customers that have been with us since before we even started FundFi. So we have a long-standing relationship with them. We really understand their business. And so that might be something that we can take discretion with. But when it comes to a new applicant, yes, all of those pieces are in play.
Yeah, it's interesting because we're going on 1,000 episodes, so I've interviewed a lot of people. And I can tell on the funding side that if we tell somebody that offers exceptional customer service, because two things that ring true is that they're listening to their customers and expanding their products as you've done. And the second thing is they have a lot of repeat clients. The clients are coming back to them again and again. So from your perspective, though, from your clients that are staying with you even before FundFi and that stay loyal and come back to you getting in, what do you think they love most about FundFi that they want to stay loyal and come back to you again and again for funding?
Yeah, I mean, certainly it's a relationship based, right? So while we don't have a massive customer service, you're not calling a number that you're getting just a random person. You're getting your designated representative, and they're working with you, and they're ensuring that you're getting what you need and what service you need. And like I said, we know the businesses, we can see the trends. Things go up and down. There are some things that we can understand as far as what that looks like and why that happens. So we can have an honest conversation with them. I mean, we had a customer now, they've been with us again for a very long time. They have a very large balance, but they are in need of, more capital, let's say. And the problem really comes to, we know that payment, that if they were to take the amount of capital they're saying they need, that payment isn't going to make sense for them. It's going to really put them in a position that we feel, again, we could be right, we could be wrong, but the way we feel is that payment is not sustainable for them. So we can look at other options for them. We can look at so instead of doing that, can we do a different type of, can we do a smaller tranche, or can you figure out a way that you can get an invoice advanced or something like that? So we can work with them and we can get them out of these, which feels like a panic situation for them. And I think a lot of the times our clients are really, really good at their trade. They're really, really good at their business and what they do. But they didn't foresee having to spend the amount of time that a lot of businesses have to spend on solving these problems or these fires, and particularly when it comes to cash crunches. I mean, 9 times out of 10, our work is around cash management. They didn't foresee that payment wasn't going to come in on time, or they didn't foresee that their refrigerator was going to break, on a Friday night when they have their busiest night in a restaurant. So those sorts of things, we try to get them to be better at preparing for, so it's not an emergency situation, and that they can then be able to just take financing that makes sense for them for growth rather than for emergencies. And I think when we approach it that way, they get through those fires and they continue to operate, and they understand this is more of an educational piece than just trying to make our return.
Yeah, I love that. I love that, and it shows. I mean, just the customer loyalty, I think, is an amazing thing. But when we talk about customers, so your customers in large part are ISOs or brokers, and I think that's interesting too, because it's crazy. We're in this world where I start to see more and more lenders not want to work with brokers or ISOs, which makes me sad, because I think that brokers provide such a value to help a business owner find the right solution, because they work with so many different types of funding, and they can help, on an individual basis, them to figure out the right source. So let me ask you this, like, from your perspective, why have you leaned so far in to the broker space? Because you're one of the top ones out there for really helping brokers with placing their loans in the revenue lending space.
Yeah. So, I mean, our customers are both, right? So initially, when it comes to our sales customers, right, are the brokers. And why we've done that is that similar to what you mentioned, we feel like they have clients that they have built relationships with as well, and they've placed them in different places. Why I think a lot of our competitors, I guess you would say, why they do not work with brokers is just like any other industry. There are some bad actors out there that might not have the best interest of their clients in hand. And I think what we've been able to sort of match our ability to manage both our relationships with our brokers and our clients is that, again, we build those relationships with the clients that come to us. So we know what's going on. And if they bring to us a situation where maybe another broker, not necessarily the one we're working with, offering them something that just doesn't make sense, that we can have that conversation with them and also save them from having a problem like that. But brokers, they work on commission. It's like any other industry. It's a very it's a tale as old as time. They work on commission. That's what they care about, and we're in it for a little bit of a different reason. But that being said, we've also worked with a lot of our brokers for a long time, and we've also had brokers that have come and gone, and we've chosen to not work with them because of certain things that they do. But the brokers that we do work with, again, it's all about relationships in that what we've built with them, and they know they can trust us, and we know that we can trust them, and we continue to have those relationships, be able to have that kind of rapport with them.
So if I am a broker now, or I'm interested in getting into the space, and I'm thinking about sending loans over to FundFi, what from that customer perspective, what kind of ISO or broker are you looking for to accept them to be able to send deals your way?
Yeah, so we have a background check on them too. We do a full background check on them, just like we do on our clients. We get referrals from other funding partners, and like you mentioned, it's a big space, but it's a small space. So we know a lot of lenders as well. We're friends, even though we compete. We can always get a little bit of an information on somebody, and just find out, like, is this what somebody we want to bring in? Sometimes if it's a really large shop, sometimes what we'll do is we'll do a limit on the amount that we're willing to do on deals for them in the beginning, just to make sure that our default rate, and we track performance. And there's a lot of things, relationships, leads, we're tracking, what they're bringing us, what they're funding with us. And if they have a dip in performance, we have a conversation with them first, and we let them know, like, these deals are not performing. What's going on? Do you have a problem with your lead source? Is there something like that? So we're willing to have conversations, but we also have to protect our business because we want to be able to continue to provide these options to many different customers. So we have it. So I guess to answer your question is, we have that onboarding process where we do vet them, but then we're also we're nurturing that relationship and seeing, okay, you're funding this deal. This is how it's performing. What can we do better? What can you do better? How can we improve going forward? We really aren't looking for the type of broker that's, again, just looking to get the max amount of commission, looking to just have us fund deals that we show them, okay, look, we found this blemish in their background that doesn't make sense for us to lend. And we're really tracking, how are they responding to that? Are they happy we found it? Are they happy we're not funding the deal, or are they pushing us to fund the deal? So we're based on relationships, and that's on, sort of all avenues.
Yeah, I love it. And that's why you have such a great reputation in the industry. So Natasha, if I am a customer looking to get funding for my business, where should I go? What should I do next?
Yeah, so our now direct sort of clients can reach out to us directly on fundfi.com. Easy website. There are different contact portions once they get there to what product they're looking for. Again, they might be looking for a loan product, but we might gear them towards revenue-based financing, or they might be looking for revenue-based financing. We might gear them towards loan, but they can start there in the contact section.
I love it. And if I'm a broker, an ISO, wanting to do business with you, where should I do? What should I do? What should I do? Where should I go next?
Yeah, so you can still contact us the same website, or we have FundFi merchantfunding.com, which is our ISO kind of contact area.
All right, perfect. Thank you very much for coming on with us today.
Yeah, thank you.
All right, so listen, and I'm leaving myself, you said it's FundFi Merchant Funding, correct, right?
Yes.
Okay, perfect. All right, so listen, you're watching this. FundFi is fantastic in a couple different angles. First of all, if you are a customer that's looking to get money for your business, you just want a fast, easy way to get money, and you know that you've got a good business, you're consistently doing revenue, you're over $20,000 a month, you've been in business 1 year, and you've got consistent revenue, especially if that revenue is growing, you really want to consider FundFi. And they've got a really simple process, a ton of information on their main website, fundfi.com. You got to check them out, fundfi.com. How cool is the name FundFi? Like, first of all, let's talk about that. I can get lost in that forever. And if you go and check out their site and how easy it is to navigate and see what they can actually do for you, I think you're going to be really impressed. Secondly, if you are an ISO, if you're somebody that wants to actually be an ISO, or you are an ISO now and you are reputable, you've got a good reputation, you want to do the right thing for the customer and want a really good solution that can help those customers with fast, easy funding, especially funding is based on common sense, funding it's based on them having a good story that makes sense, then you want to check out FundFi as well. And you can get to them at fundfimerchantfunding.com. And I'll put both of those links in the show resources page. So again, 2 paths to go. If you're a direct customer, go check out FundFi. And also make sure you check out fundfimerchantfunding.com if you're an ISO as well, so you can get your customers the help they need with revenue financing. Thank you very much for tuning in. Take care and have a great day.